Good afternoon, ladies and gentlemen. My name is Brad Matheny. Today is Friday, April 21st. Recently, I posted some cycle data that I wanted to kind of discuss with you and go over related to setups and kind of my broad market outlook. Understand that what I do over here is a lot of research, a lot of coding, a lot of studying different techniques. And again, I have hundreds of different trading systems. Over here on the left, we have a weekly ES pound F chart, which is the S&P 500 E-mini futures. Down here we have volume, and down here we have my MENT wave cycles, which is an adaptive wave cycle structure. It doesn't work really well on ultra short-term stuff, but it does seem to help me understand things on a broader cycle length, meaning 30, 60, 120, 240, daily, weekly, things of this nature. Over here, we have the same ES pound F on a 30-minute basis. Up here, we have the price charts. Here we have my adaptive Donchian channels, which are designed to basically adapt to market trends. You see they expand and contract depending on what happens, and typically provide breakout areas or congestion ranges. Then we have what's called the custom BLM Fibonacci. In this version, Fibonacci is a great tool for trending, but Fibonacci has some real serious lag time issues. If you've ever followed Fibonacci and tried to trade off of it, you'll quickly understand that when Fibonacci is showing you a price, you could be, a quarter of a point or two tenths of a point or 0.15 or let's call it. Basically, you could be 5 to 25 to 100 ticks away from price based on Fibonacci. What I've done is I built my own little custom Fibonacci. There's actually four versions of it in here that help me understand what's going on and help me identify trends. You can see the trend here with the trend here, the downward trend here, and it does provide some real price action. So when price up here is trading at 146 or 147, price down here is trading at 146, 147. It has no lag time. And that's the whole purpose of this, is that Fibonacci lags price but still shows momentum. Mine does not lag price and still shows decent momentum. It has its own little faults. It's a little more reactive, but again, we'll go over it. And then here's my custom squeeze choppiness indicator, which indicates when we get these sideways squeeze patterns before we get a trend. We get a rotation here, we get a sideways squeeze here, and we've squeezed into this area here. And then down below here, we get the wave cycles as well. And what we're looking for with the wave cycles, really, ladies and gentlemen, is there's the two longer term cycles, the green and the red here. Then there's the intermediate term cycle, which is the purple. Then we have the two shorter term cycles, which are the two blue. So you can see here how everything moved into a bullish cycle phase here, then fell into a intermediate downward cycle phase, while the longer term cycle phase contracted to the downside. These do not indicate price trend. They indicate essentially, think of them as energy wave cycles. So when things are in alignment and you get price movement that confirms it with Fibonacci price theory and or other indicators, then you can get some really good trend setups. And we'll maybe talk about that as we move into the other charts. But when they're dislocated, not in alignment, that's when we typically have volatility, and that's when we see some potential for some sideways congestion, which is what we saw over the last couple days. So I'm going to tighten this up a little, and we'll talk about how we had the dislocation and sideways trending over the last week. You can see we've stayed very flat in a very flat channel. You can see the lows here carrying all the way across over here, and the highs back over here pretty much carrying all the way across. This is, again, the last 7 trading days, we've pretty much gone nowhere in a flat zone. And that's the consolidation. But we won't, if you focus on one time frame, a 5-minute or a 30-minute or a 10-minute, you lose perspective. You really do. You see these moves and you think, oh, this is big. This is that, whatever. You have to have a broader perspective. So what we're going to do is we're going to come over here. We're going to start with this weekly chart. And what I want to highlight here, ladies and gentlemen, is the setup that we're having right now as we move into this kind of a mode. So where we're at with this mode, actually it was, let me see how I highlighted this, is probably back on the daily. Yep, okay, so we're going to go back to the weekly, and we're going to ignore the vertical lines for now, but what we are going to do is we are going to look at the setup. We have this downward cycle trend with this purple blip here, okay, and what I want you to focus on here is that we've repetitively gone through these type of blips. So if we look at this mode, this cycle trend, you got to pay attention to how this is set up. Blue line below yellow line, purple blip, red line bottoming, and then we get the red line bottom. Well, the blue and the purple and all of them kind of bottom out over here. So when we get into a scenario like that, you can see that we had a duplicate similar type of bottom right here. Then we had a duplicate, let me find it, similar type of bottom right here. And we had a duplicate similar type of bottom right here. So let me draw some vertical lines. And so we are going to draw this here. We've just bottomed. So let's take a look here. Change these a different color. Edit. Thickness. Color. And of course it's covered by that, so I'm going to set here as default, and we will mark this here, and we had another one here. Let's just mark them periodically, and another one here, and another one here, and potentially another one here, and potentially another one here. Now, what's interesting about this, ladies and gentlemen, is you can see that we go from a primary cycle, which are these levels that I'm highlighting here, to a secondary cycle. We then get this opposite cycle here, where blue is above yellow, same type of setup, peaking red, coming down to a duplicate low here. So I'm going to set this up as an alternate cycle. I want to set this up here, make sure I'm on the right one. There we go, and I'm going to set this up as an alternate cycle low. So this is essentially an alternate cycle low right here. Change the color to a little bit more green. Set as default. And we will come here and set the alternate cycle low here. Alternate cycle low here. Alternate cycle low here. And what I'm looking for, let me get over here and show you what I'm looking for. I'm looking for this setup here. So this setup right there. Right there, right there, on the bottom purple, on the bottom purple, and on the bottom purple. So what we're seeing here is this, you can see this cycle. You can see a primary cycle, yellow is above blue, big purple, lower red, keep coming out of this bottom, deep low here. We get this rotation and this expansion. So what we've got to follow is this type of move here. We get this expansion. What do we get out of the next one? We get expansion. What do we get out of the next one? We get expansion. What do we get out of this one? Moderate rotation and then a collapse. Now what changed here is the biasing cycle trend. Okay, we're going to follow this as we move. What happened here? Same type of setup. We had this deeper low. We followed by a contraction, followed by a collapse. And that's the same type of setup that occurred here. The collapse was a little bit later. Okay, Now, hypothetically, after this potential bottom in the market, where are we at over here? Well, we're in an upward trend. We need to see what happens. We need to see how this sets up. Ideally, this does not provide any real strength unless you now consider my biasing indicator. So my biasing indicator has continued to provide very strong indication of trending, and we have gone back into green. So let me highlight this. We've gone back into green biasing weekly, roughly right in this area and onward. So we are now in a bullish bias, which means we have a unique opportunity to understand that price trend should move higher. We were in a bearish bias from approximately here, to here, so approximately here to here, and that means that we should have been predominantly expecting downward price trend. Remember, the bias is designed to provide you general market trend modes. It's designed to teach you which way the price is expected to move and why it's designed to move. This is like an moving things here. This is like an underlying price dynamic. Think of it as think of it as the train is moving north or moving south, and in doing so, the train is going to continue to move north or south as it rallies or as it continues to transition. It may turn left, it may turn right, it may do whatever, but generally it's going from LA to Chicago. And if that's the case, it's going, northeast. It's going from Chicago to LA, it's going southwest. Generally, the train could turn, change direction throughout that mode, but as long as we know essentially what the bias is, what the final destination is, or at least direction of the final destination, then we have some understanding of what's likely to take place. And this is what these cycles do for us. So given the fact that we're out of this potential cycle, we've moved into bias cycling, and you can see in bullish cycling, we have a very strong potential for an uptrend after these little, call them orange bars here, here, here. Looks like I'm a little off on this one. Maybe not, but that's fine. But long and short of it, in bullish biasing mode, each of these cycles represent a fairly strong rotation with a potential for some pullback around this green middle dislocated cycle. So here we have the green dislocated cycle, here we have the green dislocated cycle, and what I'm essentially referring to, ladies and gentlemen, is this orange is an explosive potential upward cycle. We've just bottomed off the longer term trend, and now we're moving into an upward longer term trend in the red line. We've got these lower yellow and blue and yellow lower purple, giving us a very strong indication the price is likely to try to change direction and cycle higher. And then we end up in the intermediate upper cycle right here. And we end up the same way here. Intermediate upper cycle right in this area. And then we start to wane off with a last little blip right here before we get into this lower cycle phase. So this area should be the lowest cycle phase. And again, we have it here with the red line down here near the bottom. We have it here, lowest cycle phase, right in this area. This up here area should be the highest cycle phase, right in this area. So ideally, look at how this high set up. That aligns perfectly with this cycle phase. Notice how this low set up. This aligns very well into this low price area right over here. Near this low, near this potential base low, this is like the bottom of the market. So here we have the same thing. High price setup coming down to a low price setup, potentially over in this area. Where did the low occur in this area? It occurred back over in this area right here. Okay, a little early, but still into that low area. And of course, you can see it rotated out of this. We would have been expecting a high price area right over here. Did we get into the high price area right over here? We did a little later, but this is the high price area. Did we get into a low price area back over here? You betcha. That was the banking collapse right up over here. So now, what I also wanted to show you was the dynamics of these systems. So this is very well aligned weekly data. You can see that going back over multiple years here, we've got the acceleration low cycle, then we've got the dislocation high cycle, the acceleration low cycle, the dislocation high cycle. And what I'm referring to in this dislocation high cycle is back over here, and again, pointing out the area that we should be expecting peaking to occur kind of in this area, and then bottoming to occur kind of in this area. Okay, so again, bottoming occurring kind of in this area, peaking to occur kind of in this area. Now remember, price moves differently than these cycles. These cycles are measuring essentially price amplitude sine waves. They're teaching us what price is doing, and this is adaptive. This learns from price, tries to align with price. So now we come back to daily, which is what I wanted to show you earlier, is that I've highlighted a couple of interesting cycles. And let me spread it all out and show it to you. This one here, I have to modify these a little bit, make them thicker. And let me just move this out of the way. Make this thicker. Make this thicker. And there's more I want to go over, but these are the primary ones I wanted to highlight. Okay. Now where we're at with these is this daily chart provides the same data, but it's more reflective of variant price alignment and price structure. So when you get down into these daily 240, 120, 60 types of charts, we want to start looking at what is really underlying in the cycle setup. And I am focused on this cycle because it's the current cycle phase, which is a peaking red area, red sine wave, followed by this yellow below blue downward cycle phase, followed by this massive yellow, blue, purple spike after the peaking trend. So what you can see from this is that we have a couple of alignments. Now remember, yellow is below blue. We've got this downward wave cycle, and you can see that I've highlighted this one, which is yellow below blue in a bearish trend, downward pricing cycle, and you can see where this pricing cycle generated a moderate uptrend. And now if I come back even further, what I want to show you, is there is another one back here, right here. And this is the only other setup like this that I could identify. And the reason is because price and the cycles had moved out of alignment. So understand that we did have this downward cycle red line. This line doesn't change. These lines don't change. But we have this yellow below blue downward cycle coming up to this peak. We have the yellow below blue downward cycle right here coming up to this peak. Okay, we had, and you got to be cautious of it here. We had, and I may have to, yellow, blue, right here. Where was it? It is. Okay, the reason I didn't indicate this is because the blue peak isn't high enough. So see how the blue peak here was up here? It met up this criteria, it met up this criteria. This blue peak right here didn't make it. So this was an adaptive cycle that essentially qualified, same type of setup, but it didn't qualify to the downside, giving us that blue peak setup. When we have this one here, this blue peak setup did qualify very, very well to be able to qualify as an uptrend. So what we have now is we have a scenario that shows us that in certain environments, we are going to get these unique type of cycle patterns, which may prompt a trend until we get a dislocation cycle pattern. So let's look for a dislocation cycle pattern, which would potentially be kind of like this, and I'm going to highlight this as maybe a potential dislocation cycle pattern. You see this unique topping or bottoming pattern here? This to me is very unique in the sense that, I'll change this to red real quick, or purple. This to me is very unique because we end up getting these two cycle lows, this low and this low, the blue and the yellow, very, very low in the midst of this deep cycle pattern here, okay? So now, if I were to copy this, duplicate, and look for another deep cycle low, I'm looking for two deep lows in the blue lows in the midst of a red, almost like a double bottoming formation in the midst of a red cycling pattern. So you see here we have kind of an inverted head and shoulders right here with the blue and the yellow, blue and the yellow, blue and the yellow. Well, I don't see any others. I don't see any inverted. Here's a deep kind of a head and shoulders pattern here, but that doesn't qualify. And given the scenario of where we're at here with the blue trigger line, followed by the upward trend, followed by the rotation, it would lead me to believe that we are actually going to be looking for this type of a bottom cycle. Sorry, I try to kind of do this on the fly because I don't know exactly, this is all as I go kind of scenario. So making sure we have approximately the same distance, we may be looking for this bottom cycle somewhere out in this area, which is, again, happens to align with my July to August basing bottoming formation, waiting for a new potential market trend. So what we're seeing here, and we could try to go back here to see if we have any others. Let's see if we have any others. I'll just drag this back here, spread this out a little bit. Remember, what we're looking for is this kind of an inverted head and shoulders formation. Within a cycle low, we're looking for two deep low yellow blue setups. So inverted cycle, deep low, this is a very good possibility right here. Let's see if we have any others. Deep low, not inverted, deep low, not inverted, deep low, inverted, not quite deep enough compared to these. These are very deep. See how deep the yellow and the blue are here? You see here, this is inverted, but we have these higher yellow and blue. That means the cycle is not quite the same, folks. So when we get something like that, it's not quite the same. Here's that deep head and shoulder pattern again. Here is a non-trigger. Here is a non-trigger. Here is a non-trigger. Here is a non-trigger. Nothing, 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 nothing. And here you can see we get into moderate alignment. Here's an inverted version of it. Looks like it's a pretty good bottom indicator back here in 2016. So we basically come back over here, and again, this is part of the research that I do. I'm always trying to study these to identify where the market is setting up efficiently. And where we're at right now is we have another setup right here that generates our deep low. Now let's take a look at this, make sure I got the right one. Yep, it looks like it. So we've got the same basic setup indicating right about there, indicating what we are looking for going forward. Now understand that this cycle, this expectation, this up rotate, let's call it an inverted head and shoulders. Here's the left shoulder, here's the inverted head, here's the right shoulder. Here's the inverted, or the left shoulder, inverted head, right shoulder. And back over here, we have the potential for an inverted head and shoulder formation back over here. This was the only one that we had. So prior to this trigger, you can see here we had this setup, which aligned, moved into this inverted head and shoulders formation. And what actually took place was, this was in 2021, we had obviously the Fed very, very easy monetary policy. We had this upward trending consolidation, and then we moved into a bit of sideways upward trending throughout this head and shoulders formation, throughout this basing formation. Now we didn't get this trigger. I'm going to look for this trigger back over here prior to this one. So did we get this same spike with the yellow blue? No, we went through a deep, deep dislocation here. So we did not get the trigger, which is right here. Yellow below blue coming down to a very deep cycle move in a downward red trend. We did get yellow below blue a little bit right here. Did not come down to a deep cycle low. And we did not get it right here either. So this is a bit of a unique setup. Now we could technically say that, well, this one right here is close enough to this setup. Is this going to qualify for me? No. I think this is a broad, deep setup, a dislocation in trending cycle. The blue did not come down far enough. We had the spike in the trigger here. You can see how the trigger, in reality, the blue trigger came here, followed this line to the downside, got above it right up here, followed this line down, set up a very deep, deep low. I mean, technically, the yellow and the purple lined up right here, which is very similar to this setup right here, in the sense that it's early, but you can see how much more early it is, and the blue didn't actually qualify. So in this regard, I think that we're going to have to disregard this trigger as a dislocation of a non-alignment of price trend. But given these cycle trends, now I want you to understand that we are following these, trying to identify what's actually taking place in the setup. So given what we're looking at here, if my analysis is correct and we're going to move into a bit of a potential sideways trending, which we cannot, this was a speculative bubble, so we cannot take and understand that this cycle move up, the cycle move down, cycle move up is going to be qualified. What's actually more than likely to happen at this point, as we are more than likely, we're more than likely to see some sort of an upward cycle trend moving into May, followed by a correction down into June, July, consolidating around 4,390, and then moving up into this area into 2020, early 2024. And the reason for this is very, very simple. We have to navigate through this current downward cycle trend. So let me come in here and move you through this cycle. So these are moving downward, okay? These are moving downward. The broad red cycle trend is the bigger cycle phase. So we're into this downward cycling phase where we've seen this blue downward trend. And remember, here's something very similar to it. So where we're at, we're going to come down here. We're going to begin to bottom. The purple line is going to move all the way back up, indicating we could see some upward strength. And then we're going to get into this sideways basing bottoming mode before the cycle dislocates into this panel. This is basically intermediate cycle phase at maximum amplitude, intermediate cycle phase and short-term cycle phase at near middle upper amplitude, and broad cycle phase at lowest amplitude. This is where we could potentially see a bit of a reversal. And this is hypothetically going to be, we take a look at this period, this is 8 to 7, so about a month out. And that's about what I've drawn here. From April 21st to May 21st, right about here, this is where we're looking at some sort of a peaking formation right over in here. And that'll put us into this period, this dislocation period. Then we move into a reallocation period. So we get into our bottoming cycle phase right in this area, which is fairly early. So let me try to draw that as our bottoming cycles roughly right in this area. Maybe a little higher, but I'm just carrying it down to where I think it may go. And then eventually we move into this rotation where we get into this trend. The broad cycle downward phase here reaches a potential bottom, and look at how this bottom right in here, right where we get into this broad cycling bottom setup right here. So a very good alignment of cycles at this point. We hit our low, all of the cycles reached an extreme low at this point, and we may at some point reach an extreme high back out here in this cycle phase. We'll just have to see how it plays out. But again, my interpretation is that we are going to move into this type of a cycle phase, which means that we're going to move into an upward cycle phase. Once this broad cycle bottoms right over in here, it's going to roll back up, and then we are going to be over in this area, July, August, September, October. We are going to be moving into a very strong upward trend, and I believe we're going to be likely pushing up into the 4,400, 4,600 area on the ES by the end of this year. That'll put us near new all-time highs by the end of this year. So now let's come over here and take a look at the 30-minute. And what I really love about the 30-minute, and I'm going to explain this to you, is by zooming in like this, okay? And I know it's really hard for you to see, but I'm looking for cycle amplitude increase, decrease patterns here. Kind of hard to see, not really visible, but they are there. You can see that they're very short term. Now let me go to 60-minute, and we're going to try it on a different time frame. But this is something that I love to do, watching cycle amplitude periods rotate. Okay, I have to resize my Fibonacci chart. This is a custom calculation. It doesn't automatically resize yet. It's part of the coding process. I'm going to set that up to automatically resize. We'll go from there. But now, can you see these little arcs? So let me try to draw on this, and I'll try to explain it to you. So right here, we get a bit of an arc across the red, and then we get another arc across the red here, and then an arc over here, and an arc over here. And then we get a little arc down here, and another little arc down here, and another little arc down here. So I'm looking for these things because I want to see how price cycles, okay? And what I want to do is I want to come back into here, and now I want to take a look at these cycles. So ideally, as I'm looking for these blue lower cycles and blue upper cycles, this is on a 60-minute chart here. So I'm looking here. This is blue upper cycle rotating back downward, and we're getting near kind of a sideways congestion. This is blue downward cycle rotation and arcing back upward. We're getting kind of into a bottom upward trend. Blue upper cycle arcing. This is like a maximum price amplitude area here before the blue starts to contract. We're getting into kind of a topping sideways pattern. Blue bottoming back in this area. We're getting into kind of a bottoming pattern. So I'm looking for these cycles because I want to see how energy frequency related to price and these cycles actually trend. And what I believe is that get rid of these, so maybe we can try to look at a different interval. What I believe is that the price moves in energy waves that are unique to price cycles and unique to price trends. So I was looking at one of these earlier, and when I zoomed all the way out, even though I don't have a lot of data here, it became clearly evident that we were getting variant cycle trends. Let me go down to 15 and see if we get it. All right, still have to resize this, but bear with me as my Heikin-Ashi chart is in fairly early stage development, but so yeah, we don't get it here. The long and short of it is we get this price move, and it is evident. It's just we have to see. Look at the intervals. Well, let's go down to 10-minute. Forget about Heikin-Ashi for now and see if we get these cycles. See, 10-minute we don't get the variance. So maybe 30-minute. Kind of. So can you see here how we get this cluster of upward movement? Okay, and then we see the cluster of downward movement, and then the cluster of upward movement, and then the cluster of downward movement, and then the cluster of upward movement. That's kind of what I'm looking for in these cycle patterns, in the sense that I'm looking for condensation of cycle patterns. So to say, they coalesce into a trend which is very efficient. Now, I do love the 240. I tell you, I really do like the 240 simply because the 240 provides a lot of context, in my opinion. Now, it's not the same as the daily or weekly. I still rely on the daily, weekly very heavily to try to provide context for market cycle trend. But again, when we move into these cycle modes, the purpose of this is to determine how we have an opportunity to trade these cycle trends. And now you can see the green shows up. So when the green is a separate longer term system, sometimes the green and the red align, which all we see is the red, because the red gets drawn over the top of the green. But now we get the longer, broader cycle trend, which is the red. Then the next one, the intermediate cycle trend, which is the green. And you can see what we're doing over here right now in this basing pattern is we've just come down to a green bottom. We're nearing a green bottom here. We're nearing the two blue pattern bottom. And the purple pattern, which is very similar, a little faster than the red, is nearly in alignment with the red. It's actually leading the red here. So if we follow the red, the green should bottom, follow the blue should bottom out here over the next essentially day or two. That's Monday, Tuesday. We are going to be into a upward cycle phase, which is going to be aligning with this upward cycle phase that I mentioned to you over here. And I believe that we are going to be by May 18th, 15th, 18th, 20th, I believe we are going to be pushing up into this 425, 426 area on the SPY, maybe 4240, 4300 on the ES. I believe we're in that cycle phase to the upside. And again, the goal of this was to show you some of the stuff that I do in the development work. So when I tell you that, you know, my expert growth and what I do, I develop these tools, I develop this research. All of this helps me determine what is coming next. I can apply these to almost any market. You know, like for example, we come in here. I'll just give you an example of what we're dealing with. We come into the standard Heikin-Ashi mode. This is my standard mode of Heikin-Ashi. So I've replicated Heikin-Ashi here, and these prices do not correlate to price data. Okay, they can get very skewed. Then so you take a look at this data, and let's move this out. This is 240. What you're looking for here, folks, is trending. Okay, the benefit of Heikin-Ashi is to be able to look at the cycle data, look at the breakout data, and look at trending. So when we get into trending here, and we get the alignment of trend, which comes in right over in here, this gives you the opportunity to potentially trade in a trending cycle phase. When we come over here and we go to the secondary mode, which is an alternate version based on a moving average, an EMA, we get into this broad cycle trending mode. Very clearly indicates up and down trend cycles, but somewhat lags the market. Understand that we didn't catch this top right at the top. We caught it 2 or 3 bars afterwards. still gets mixed in sideways trending, which is okay, because if you're measuring, for example, trend momentum, you want to try to get in when trend momentum reaches certain thresholds. So hypothetically, you might be looking at, let's set this level here at 6 and down here at minus 6. So there we might be looking at trying to trade only when we get into a downward cycle trend and getting out at the Donchian level, say up here. When you get into this upward cycle trend right here, you could say, okay, we're in an upward trend and we want to protect ourselves with this level here, potentially. You could stay there until it rotates to the other side or rotates downward over here. This would allow you to catch almost all of this trend, and then as it rotates downward right here, you could get out of it, or subsequent bars here. Now, with the secondary trend, the next type, this is a more reactive Donchian. And again, you'll see how it rolled downward through this rotation and rolled into upward trending through most of this. This is a much more reactive type of Donchian. And again, having this threshold here and or this downward threshold here allows you to try to take advantage of trends when they exist. And lastly, we have what's called the BLM version 3, which is the newest one. And this is an adaptive price structure. The purpose behind this is it uses advanced logic to identify price structure and to try to keep us within trends without having very much lag at all. So you can see we've stayed in this mode very solidly through this uptrend, stayed in this mode a little bit with some congestion right over here, rotated back out of this trend very quickly, and like I said, these are probably pretty bad examples. If we come back to the last real big trending days, you can see back over here. So here was the pop and the rotation. The purpose behind this, ladies and gentlemen, is to see the rotation very quickly. So understand, and there's the end of the cycle data. I only have the cycle data going back a little bit on these intraday charts. But again, we get the pop here. We get the rotation to the upside here. We're able to catch this trend, and we start to get weakness back over here before it really collapses. Then we can look over here and say that we had very clear downward trending until we got this pop. This was the news pop, so this is something you can't theoretically predict for. It's a reactionary trend. But what's most important is that you are able to, if you took this trade, protect yourself quickly before you get into this rotation. We had this rotation here, wiped out quite a bit of our profits, went back into neutral trending, and then got us out basically right over here, which in my opinion is very good protection for this trade. Stayed in this downward trend, rotated a little bit here, stayed in this upward trend, stayed in this downward trend. That's ideally what I'm looking for, because the sweet spot's that 30, 40, 60% right in the middle of this, leaving a little bit to trail downward. You don't really capture the entire move. The idea is to capture the 40, 50, 60, 70% in the middle and call it good. So now, the way this works is we'll go down to 5 minute and I'll show you. Well, we'll go down to 10 minute. And you can see here, once the data shows up, there we go. So you can see here now these 6 percentage point or 6 levels here on this Bollinger Band or this choppiness BLM squeeze indicator, they're too far away, so we need to move these down into some reasonable level, maybe 3, 3.5 roughly. I'll set this down to roughly 3.89 and try to get this one about the same area, 3.77. So ideally, like I said, and you can see how the cycles have now, everything pretty much aligns to these short-term cycles. But again, the idea here is you catch the move, you see the move, it's very clearly showing you the downward cycle trend, you've got your breakout, this was a bit late in this downward trend, but you've got the ability to catch it and take the next move. Same thing happens back over here. You've got this upward trend, takes place very solidly, gets you in roughly right over in here. You catch the move, it starts to weaken, you run with your trailing levels and wait for these start to exit triggers, and then before you know it, you get your exit trigger right back over here before it collapses, gives you that opportunity to try to trade. And again, Heikinashi, if you've ever run with Heikinashi, you know that Heikinashi is a mess to try to trade with. It really is. And just trust me from experience, or learn for yourself. When you get a trigger with Heikinashi and you try to get into a trade, price is going to be 5 points to maybe 50 or 80 points away from where you're really trading, depending if you're trading the NQ or the MNQ or what have you. ES, it's just not a real price. It's pretty, it looks kind of cool, but it's not a real price. Okay, so you really can't rely on it other than just showing you trending. What I'm trying to do with this Heikinashi system is to provide me more context to real price trending, giving me true, clear data instead of garbage data that I can't rely upon. And that's exactly what I've done here. So, again, this video is to show you these cycles and what I think is coming. And what I think is coming is, again, as long as the bias stays in place and we get through earnings and we move into, May, I think we're going to see May continue to move higher, continue to try to target this upper area. Remember, 420, 425 on the SPY, maybe a bit higher. And then, like I said, come May 21st through 28th, I would start to be very cautious. I can't align that any further. Very, very cautious of a moderate pullback. And remember, everybody's going to be telling you this is a collapse, and really it's only going to end up being maybe, and I'm going to get this in here, maybe 4 to 7% to the downside. Yeah, and it looks like 5%. Maybe 7, maybe 7.5%. This is going to be really a very short pullback. Everybody's going to tell you this is the end and the world's collapsing or whatever. I don't see it that way. I see this as a pullback setting up to a wave C rally, and wave C rally, like I've been highlighting, is going to continue to go quite a bit higher. Okay, guys, hopefully you enjoyed my little intro to cycle patterns and how I use them. Remember, you've got to kind of pay attention to all the data. Longer term, short term, intermediate term, and really pay attention. If I had my favorite, I'd tell you 60 and 240 provide very clear definitions of data, in my opinion, for us to work with. And this is a good example of how you can be trading for these breakout ranges. Remember, it only gives you maybe 2 or 3 really good breakouts every couple of days. This is a 60-minute chart, and remember, here's a decent little breakout. Here's a couple little downward trends. Nothing here, maybe something here. I moved this down earlier. Solid little breakdown trend here, and then pretty much nothing through most of the day over here. But again, you're only trying to trade when it's opportunistic, not every day. And that's something you have to learn, is there's not always opportunity every day. Okay? So, that's it for now. I'm going to get busy creating my charts for the weekend, and I hope you enjoy.